If I were a rich man, all day long I'd sing a little song. If I were a wealthy man. Ha! Well, Coffee with Scruff is a little bit early today. Why? Well, because Scruff's going away again tomorrow for 3 days.
Not again.
I do know the power of the dark side, and that's why I'm going tomorrow. I keep forgetting if I press that button, he keeps rattling on for ages. So if he doesn't shut up, I'll have to cut him down. We'll have a lightsaber fight. I am impressive, so look at me. Right, what we rattling on about? It's actually planning today. I'm going to put some money in the Vanguard. It's Friday. There's been a bit of a change around on the small accounts that we're looking at. For those of you who don't know, we're building a small account from January. Did quite well out of it. Bought a holiday with it. Banked quite a bit of money, which I'll show you. Well, in fact, I bought more than one holiday. I've had a few. I was on the cruise. I was in a lodge. And I've just come back from Spain. So that was all from that small account. Anyway, when it came to the end of the tax year, there was some of the members in the group who missed out starting, said, oh, we're going to do it for the tax year. So, all right, I'll do it with you. So I was running 2 accounts in tandem, which is quite difficult. And I'm actually just mirroring the 2 of them. And then there was someone wanted to do a little bit of prop. I was like, oh, okay, look at that. And it was getting a little bit much for me. And then while I was in Spain, the idea of why not trade anywhere? You know, not sort of laptop under a palm tree, but just, I travel a lot and I've got another channel called Scruffy Adventures. Do go check it out. And I thought, well, why not combine the 2? Because I'm not a vlogger. I'm not very good at sort of going, oh, look at me, I'm amazing. Look at this hotel. Ooh, oh, look, there's Joanne's tits.
You dirty old man.
Well, I see her tits all the time, and they're impressive. I'll give her that. You know, 55-year-old, she puts a lot of women to shame, I tell you. Anyway, I was having a moment there.
I don't know where you get your delusions, laser brain.
I love my wife, and for all we old, she's still the most beautiful woman I see. Well, Wonder Woman's got a good go. That would be a good 3-up, wouldn't it? Princess Leia and all. Well, that would be a night. That would be a night. Oh, I don't think my heart would take it. But what a way to go.
How does your missus put up with you? Must be my legendary prowess as a lover.
Anyway, sorry, I was definitely having a moment at that point. So, I've lost my train of thread altogether now. So, I can't wait for tomorrow. Going to the spa. What was I saying? Yeah. So I'm not very good at vlogging, but I do work when I'm away. I am a borderline workaholic to a degree. Even when I'm on holiday, I'm always at the charts. And for all, I sort of only work for myself in this office. I'm not in industry anymore. I don't think I'll ever stop. So even if I stop doing YouTube, etc., I'll still trade because I enjoy it. And obviously it helps pay for my lifestyle. Now, the idea came about combining the 2. Well, okay, I'll give you a quick glass shot of where I'm at, but then show you a trade from my laptop setup. And then that way you can actually see that this job isn't as bad as what you think. And you can reap the rewards. Very, very simple process. So what we've done is I thought, right, okay, I'll combine the 2. So I shut down the account I started in January because I do it anyway, because I put the money in enough to service the trades I'm going to take. And I want to bring the leverage down. So at the end of the month, I'll shut it down and then bring the leverage down sort of 50, 20 percentage points. Because eventually I want to get it right down to 0. It'll take me maybe about a year, maybe it's a bit longer to get right to 0, get the account big enough. Because leverage is a killer. It's brilliant when it's for you, but when it's against you, it'll destroy your account. So the lower the leverage, the better. It's why I like ESMA. It's why I like the ESMA rules. So that's what I did. I combined the 2 sort of accounts into one, spent the money, bought a prop fund, which you would have seen me in the live stream of the fivers yesterday. And the fivers are the only prop fund that I would consider in the prop industry. I don't consider any others but the fivers. Why? They've never not paid me. I know them personally. They've got a moral compass, and I think the platform's pretty good. So that's it. And it's a bit like my brokerage. I use BlackBull and IG. Why? I need one for the leverage, and I also needed a secondary broker when sort of the pandemic was around. My broker used to collapse a lot because of the influx of people coming in. So I had a secondary broker and a main broker. But I also don't like keeping my money in the same place either. So it's kind of split between the two. I just stick with them because they work. Right. So what I'm going to do is I'm going to show you how to plan a trade out so you can go on holiday and you can enjoy the fruits, and then show you where I get the profits from and what I do with them, which is build up the Vanguard. So let me switch on.
Well, we're waiting.
Okay. So I'm going to start with this. Now, it looks mental, but let me kind of clarify for those who've been watching what's going on. As I say, I've merged the accounts. So I'm not trading multiple accounts, okay? So here it is here. So merge the accounts, shut the first one down. We've been putting the surplus money in the Vanguard. I'll show you that as well. And we've joined these two together. So I was going to start this with 200 quid. The 200 quid start plus the merging gave it a balance of 1312.95. Okay, so that's what I'm working to. Okay, and there it is. We move the Vanguard to the tax year. The fund start 1st of January with £5.19. So that Vanguard is here. All right. So this particular pot of money, there's two pots we look at. We look at the emerging markets and the cash, and collectively, well, when I last did this, there was 7 grand. So we'll update that today. And we're looking to get it to 10,000 come the end of the year. Bearing in mind, both pots started at 200 quid in January, and all the money that's in it is just recycled money, as is the holidays that you see me on. And tomorrow will be the start of Trade Anywhere, which will be done on Scruffy Adventures. Okay, and that's what I'm trying to get to all the time. So there's my summary of where we are. Doing quite well. All right, quite happy with this. But this operates everything that we do. Now, I had a bit of a stinker this morning. Now, this sheet actually kept me in check. Got out of hand, no problem. I was in bed at the time, woke up. Don't particularly like that. I'll kill it off, and then I can trade my way back. And I'm now net positive. And that is represented with this account here. This one, okay? And if I just pull this back slightly, there's the loss. Fucking terrible, all right? And this account was merged together. So you go up, don't get it right all the time. You know, get a bit of a bad day there. Don't get it right all the time, but you can kind of see what's going on. Surplus money in, and there should be some transfers. There's the transfer from shut that account down, moved it over into this one, so I can do it collectively. So from the first, this has made 810 quid's worth of profit, or 780 once you take out your swap costs and all that sort of crap. I'm quite happy. Okay, so I'm happy with how this account is performing, but it's all tracked from this. This thing controls what I'm doing. So if you look at it, it looks a bit mad. So let's build it up from a fresh one so you can see how it operates. So from here, so we know, as long as we assume this is May the 1st, we'll be starting the month with 2,140. Clean slate. All right. So the first thing I would need to do is put my rules set in. Well, my rules are the same anyway. So I trade twice a day, and I try to get them done in the London session. Okay. So it's two times a day. The markets that I look at are these here. Cable, Pound JPY, US JPY, gold and Bitcoin. Don't trade gold that much, but I do use it as a barometer, and I'm looking at these two strategies. Okay. That's all I do. Right. So that's the first thing. So the next part of it is, what target am I going to set myself? Well, as the account grows and you stick your percentage at the same, that means the monetary target grows as well. Now, last month, it's set at 328, so you round it to 330. Fair enough. But this month, because we're doing well and the account has grown, that same target is now 535. So I could actually be stretching the account a little bit too much. So you've got to take a look at it and think, how realistic is that? Well, I think 500 quid is a reasonable growth. So we'll drop it down to 20%. Now it's a realistic target, and the goal here is to beat it. If you set a reasonable goal, realistic goal, and you achieve it, you feel good. But if I set that at, say, 700 quid and I got to 650, you think, bollocks, didn't hit the target. So your expectation will make you force a trade. Force a trade, we all know what happens when you overtrade, things like that. It always ends badly. So how long am I going to take to get there? Well, I want it done this month. So 1 month. So what's the true target of the goal? Well, the overall target is 428. I'll just round it up to 430, just like so. Now what this is telling me, to get my 430 quid at the end of the month, I need to achieve 20 quid a day based on a 5-day week. Okay. Can I split my positions? Well, I can. I like to work to a maximum of 5. Now, if I'm doing a ladder trade, that's a different scenario. But that means I can have 5 positions and I'll be fine. Okay. So what does that equate to as a position size? Well, that's what this section's for. It's telling me, well, 214 is my max bid for a normal trade. But if it's an A1 banger, 428 can be as high as I can go. But that would be absolutely pushing it to the limit. And then if I split it down by the 5, it works out about 43p for each split, give or take. Okay. So I now have to put a starting bid in where I feel comfortable based on that parameter. Now, I trade Bitcoin a lot across the weekend. It'd be stupid to go in high on Bitcoin because it moves so quick. So I like to start small and build up house money in order to kill it off. So at the beginning of the month, I'll start at half the position size of the max bid and then build up into the max bid. That way, I'm not stressing the account and I'm building up house money. So if I've got it wrong and it's on a little bit of a bigger size, I've built a cushion up to cover it. So that, on this scenario, would start at a quid, right? So I'm happy with that. So I've got the bases selected. Now, the next part of it is I want to increase the position size as I go. Now, there's 2 ways to do it. Because we're looking at an MT5 platform, that's going to have to go up in increments of 10p because that's what the increments are on the platform. So the next bid is 105. Well, if I put 105 in here, five in there, okay, the next one is, so I'll have to do a trade, miss out a trade to increase, and then increase on the third trade. Okay, so that's how that works. And then when it comes up, yeah, put my 110 in there once I've done another winning trade. Well, that's 16. So I do another trade, win it. That becomes 116. Right. Do the next trade. Fine. I can now start trading at 120. So that's how that works. Okay. Increments. And that's based on this increase. I increase it by 5%. I then look at my investment. I want a 10% return of any money I put on the table as a minimum investment target. Let me explain. So here, it's quite simple. Put the date in. Put your balance in, what you're starting. So that would be 4. Okay. How much per day am I willing to invest? Well, at the moment it's 8% because it is a very small account. But that is an investment for the day, not the trade. Okay. If I'm stupid enough to use it all on the day, well, then I'm just dumb, aren't I? But essentially, it's 8%. So that allows me 171 quid's worth of losses today across all of my trades. All right, so that's what that's telling me. Now keep that in eye shot on every position that I put in so that I know if I'm getting into trouble, I know when to pull the plug. And that's what I did this morning with that loss. So the bid size in this scenario would be £1. So that tells me that particular bid, if I was to use the entire investment, I can have a stop of 171. Don't have to use that, but that's telling me how far that stop can be. So if I put my stop in and it's 50, well, it's miles away from the investment. It's not going to cost me. So I understand that. Okay. Now the next part of it is this. Looking for the P&L. Now that bit, the investment, that £17.12 equates directly to that 10%. So what it means is when I go to market, the minimum I want out of that market is 17.12. So therefore, based on that investment, if I went 100% to market, one bid, I'm using the entire stop. I need £17.12 back minimum, which is a 10% return of investment of 171. So if I do 20 quid, do a 20 pip move, then yeah, I'm happy with my 20 quid and I've got a 10% investment of the day investment. Now, if I do that a couple of times, so and just across here, well, in there, you just put in whatever your commission is. If you're taking any money out, we'll just call it the US 100 for argument's sake. The trade can be sort of gold eye. Was I buying it or selling it? What mood was I in? I was in a good mood. Why'd I take the trade? Level break. Whatever you want. Put your notes in. Okay? So you just drop them there. I'm more interested in losers now. So that builds that criteria up. So that's one trade. Drop that in again. These parts stay the same because it's across the starting day. That might only be 50p because that's where I feel comfortable because I'm trading Bitcoin. Half of where I would start. Why? Because it's a ludicrously violent market. Right? So therefore, I'll reduce the position size to protect the account. That allows me a 342 pips stop, but my investment is exactly the same. Still do my 20 quid. I've earned another 10% of that investment. So I've now got a 20% return off 2 trades off 171.2. Hope that makes sense. And that's how I operate. That's how I work this all the time. Controls exactly what I'm doing. It slows me down. It tells me what the target points are. Tells me what minimum I need to live. All this sort of thing. But it also tells me how far the market's willing to go. In this case, 171. But I don't have to use that. Remember that. These are not there as a target. They're just maximum perimeters. You should be working on roughly about half an ATR. So, take these out. Just so we'll bring it back to 0. I'll adjust these next month. And we'll have a look to see what's going on now. Well, at the moment, for this week, I've now got another 413 as my profit share. So what I would do there, I'll be taking out... Well, it's only the 11th, so we'll take 300 quid. I don't have to take it all, so I'll take 300 quid. I think that's reasonable today. So I'm going to take £300 as my wage today. Okay. Why? Well, because if I take it all out, then I'm starting to stretch the account a little bit, and it's not really something that we want to be doing. Okay. So I think 300 quid is a decent amount. Now, next week, it's already working out what the profits is again, because it's always half of the profit, or half of the profit split that's left. Okay. So off we go. So 300 quid. Happy with that. So that's what we're going to put in the Vanguard. We're going to dump another 300 quid in. All right. So we'll save that. Or should we take 400? What do you think? You know, if I bump that up to 400 quid. Well, that means I've got 1740 as a starting balance next week. All right, we'll take the 400 quid. All right, I can still work with that. So this week I've made 400 quid. Good, isn't it? Right. So let me switch something else on. So I've got this one. Now this one's slightly different. It's done exactly the same way, but this is a prop fund. Set the account up to pass in 2 months. Okay. £5,000 account. It's got a 6% drawdown, which tells me what the baseline is. Push this over into April. And then there we go. It started again. Had a bit of a stinker because I was kind of mirroring in here what I was doing on the other, and I got caught on both of them, which is a bit of a bugger. But my changes are this. I need to achieve 10%, which is 500 quid to pass the fund. Do it in a month. 500 quid target equates to 23 a day. Might be a bit much. Change that down into 2. It's 11.50 a day. And all I have to do is just do a few quid more than that every day. Knock it off. Probably still do it in the month. All of this is exactly the same. But the bid size, as you can see here, 43. Between 43 and 87 is based on the drawdown. And my drawdown is this at the moment. And then that account, again, pull that down, is here. Drop that out. There's your balance. And then there's your history. That's where I got clipped. And again, paid off the losses, and I'm a net total of 22.73 for the day. So again, what I'm trying to show you at that point is if you're consistently doing the same thing, it pays you over and over. And that's what this is all about. So let's now put that payment into Vanguard. I'll show you the final Vanguard figures, and then we'll wrap this up for this one. And just tell me if you want me to keep on going, because it's very time consuming what I do. And if I see the interest and you want to see it grow, I'll keep doing it and inspiring. But if not, I'll try and think of something else to help you. But anyway, let's get the Vanguard on and we'll get some money into it. Okay, so the first thing I've done is I've taken the money out of here. All right, so put that in my wallet so it'll drop down in my bank account, and that'll have changed that. So that fund's correct. Now all I have to do is just go and place it into the Vanguard. So let me switch that on now. Okay, so I've logged in and we're ready. As you can see, the Vanguard is now back over 100,000 after it took a mighty smack in the teeth. And these are coming down quite nicely. So it shouldn't take too long to recover. So what we're doing is we're tracking the cash and this particular account here. So we're going to top it up this way. Next available price, 400. Okay, so I'm going to put 400 into there. Click next. Agree to the charges and the payment method. Now it's going to ask me to put my bank details in, so I'm going to have to pause the camera a little bit. So it'll be a Visa debit card. Pause and I'll sort that out now. So that's it. Card details are in. Just need to submit it. Okay, a few minutes. Well, if that's the case, I'm having a coffee, because we all know Scruffy likes a coffee. Oh, need to put the code in, so I'll have to pause for this. Right, there we go. So that's been done. Pending orders being put in. So at the first available price, it'll buy into that. But if I go back to the investments on the portfolio, you'll see the cash has now jumped up quite considerably. So what I would do there is, and I'll just go back to this Vanguard, drop the date in, which is there. And then that pot one has been 400 quid. So we'll drop 400 quid into there. And I just need to adjust these two figures here. Let me just pull that to one side so you can see it. So the emerging market balance at this moment in time is 7272.97. And the cash is 403.64. Okay. And then if I pull that back into shot, you'll kind of see they're the same. All right. Pull that up to there. And there we go. So we now have a balance in that account of 7,676. So we're 76% to the 10 grand, and we've got the rest of the year to go yet. So not bad, I don't think. Not bad at all. It's just building along ever so nicely, and it'll start looking after itself. And that's about it. So I'm quite pleased with how this is going. And if you look at that, over the period of time, it'll grow and it'll grow and it'll grow. And everything will be fine. Okay. So what's the moral of the story? Planning is everything. And from there, just let it grow. Give me a second. I just need to have a look at something. Sorry about that. It's just if you don't click accept within an hour of your email coming in for the amount of money you've taken out of BlackBull, to cancel a bloody order off. And it just flashed up, so I needed to do that. So that's it. So just plan it out, keep track of everything, and you'll be fine. If you're stuck, I'm very easy found. Just drop in the description, you find all my contact details, etc. But as always, trade well, keep the risk managed, but above all, do what you love, and the money will follow. See you all in the next one.